Good morning. It is a Wednesday before the market has opened. It's January 28th, and there's a lot of information coming out from earnings this week. We had several earnings yesterday, some big ones, some big moving reports, and we have even more today. We have some earnings reports coming out of ASML, GEV, AT&T, Progressive, Starbucks, Elevance. Um, Before the market opened, the reports are out, the stocks are moving, and there's going to be a lot to cover today. We're going to cover stocks fundamentally, look at their valuations, take a look at how their businesses are performing, see if they're desirable businesses, and value them based on the expectation of cash flows going forward as well as profits. And we're going to look at charts. And Daryl, who's joining me, he's going to look at the charts, analyze how the stocks have been trading. I'm really looking forward to seeing what he has to say on some stocks like Meta and other stocks where he could kind of interpret and see how they've been trading. How you doing this morning, Daryl?
I'm doing wonderful, Victor. It's really good to be here. Hello, everyone.
It is good to be here. Yesterday, I took a few arrows. I'm a stockholder in UNH and CBS, and for a while, it's still good stock. CBS was one of the bright spots in my portfolio. Had a really good 2025, and CBS was a part of it. But yesterday, UNH was down 19.6. Ouch. That one really did hurt. And their earnings came out. Now, their earnings were pretty good. They weren't too bad. They guided carefully. I think it's still a really good company. But the reality is that the market really sold them off on the news that the government is going to keep the Medicare premium plan. I forgot what they call it. They're going to keep the the rates close to the same, not allowing for a 4% price increase, which really takes revenue out of UNH, Humana, CVS. I forgot who else. Whoever is offering health insurance, I guess the premium insurance around Medicare, they kind of got stung with that. So that was going on. The software space also sold off quite a bit. And the story continues that AI is expected to really change the way software companies are going to operate. And it may be a negative towards software companies. Now, I don't agree with that narrative. I don't agree with the thesis. And welcome to stock investing, right? I invest by trying to understand a particular industry and really in for me in my portfolio try to forecast what's going to happen. I happen to have software application space is right at the center of my knowledge base, right at the center of my competence. I've worked in the industry. I understand how these businesses work and understand the marketplaces that they sell into. I also understand AI and understand how AI could be used. I use Gemini. I understand large language models enough to know what they do and understand agentic AI and the whole story that, hey, service now is going to be totally disrupted. I just don't see how that is rational, but time will tell. What's interesting about the market is sometimes some of these themes take a while for them to play out. And sometimes these themes play out longer than I expected. For example, the semiconductor space, it's been rallying for 3 years. And 3 years ago, I'm like, okay, we're rallying on semiconductors. They're going to build out data centers. And I thought maybe they'll have a good year or two. We're on year three and they're still cranking higher. And ASML announced this morning they're doing really well, so their stock's higher. So that is what the market's doing. Financial space had a day off, so to speak. Industrials, RTX, I guess, announced really good earnings and their stock traded higher. Amazon had a good day yesterday. And this morning, it looks like the futures are pointing higher. The Nasdaq is is doing better than the other two major indexes. Gold is up a lot. Gold and silver have just been killing it. And I have no gold, no silver. Do you
Mhm.
have any gold or silver?
No, I do not.
Man, anybody who's in that space is really doing well. Oil is moving higher. Interesting. All right. All right. So it looks like Jan is on this morning. Good morning. Very good to see you. Thanks for joining. Let us know if you guys want us to look at some specific stocks. If you're a member, just pop it in the chat. If you're not a member, no big deal. Just buy a $5 super chat and we can cover your stock. We've got a lot to cover, plenty of topics to go over, and we can get started with, just looking at earnings. And I would really like to see if maybe you can cover Meta from a chart perspective. And Meta is going to announce this afternoon. And, that earnings, last time they announced, the stock sold off quite harsh. Um, and this time around, I think they learned their lesson. But I'd be curious to see what Daryl has to say on Meta. And I know that at times you state what's the implied move, higher, lower.
Yep.
If you have that determined, I'd really be interested in hearing that.
Okay, I do have that. So we'll look at Meta. Now let's put things in perspective first. This is a 15-year trend channel. So basically up and to the right, 2022 was a big sell-off in the market overall. So this is not specific to Meta. So this 15-year trend channel, they are trading pretty close to the top of that trend channel. Then we'll look a little closer. We'll go to a 5-year trend channel. So this just goes back to the end of the, I guess it was a short-term bear market in 2022. So this is attaches to the low there. And then we have another line connecting as many points as we can across the top. And they're actually out of the channel in this particular view. So let's go to just a 1 year. So Victor mentioned the sell-off after their previous earnings. It was a sell-off that ended up being about 22% down to this bottom. It's interesting that that was a support line and it came down and basically bounced off of that. Kept trying to recover up to the 200-day moving average, but we have not closed above the 200-day moving average since it fell below it. We are getting very, very close today. The 200-day is at 678.06, and we closed yesterday at 672.97. So that's been a pretty significant point of resistance over the last 2.5 months. That also is pretty close to the gap down that we had. So I have this red dotted line going across here because that would be gap resistance. So we have two major points of resistance right here. They had been testing that pretty heavily and then really trailed off again the last couple of weeks. And they are moving back higher. They got two analyst upgrades this past week, so they are pressing higher. The RSI is back to the 60 line. We're just over 60. That has been a point of resistance and on the 5th of January, the 28th of October, the 17th of September. We hadn't been above the 60 since the 15th of August. So that seems to be, as far as momentum goes, that seems to be some resistance as well. So it'll be very interesting today. Well, tomorrow, actually. Well, maybe even today, if it runs any higher. I don't know what they're doing in the pre market. Let me look real quick.
They're up slightly.
Yeah, they're up 0.25%. So we'll see if they can break this 60 line. On the PPO, we do have a buy signal. We got a buy signal last Friday. And we do have a buy on the RSI. If it's above 50, that's in bullish territory. This resistance has been somewhat of a concern.
Yeah, and
So,
looking at the low that I guess the resistance line that they hit there, I bought shares around that point. I
yeah,
started buying shares because I was like, okay, this is getting a little overdone. So I started buying shares, even though Meta is a very big position in my portfolio, well over 10% of my portfolio. Um, just the opportunities there. So I bought more Meta.
yeah. So I think Meta will do okay today. I mean, they're still an advertising machine. The CapEx was the biggest point of contention investors had with Meta. So if Meta can show that they're turning that into a return on their investment, along with all of their advertising spend, I mean, advertising income, I think they can do pretty well. We need to break above these 2 points of resistance here. If we do, we could run right back up to somewhere between 706 and probably 758. So there's a $50 range that they could run up to pretty quickly because there's no resistance after that.
Yeah, and Meta is one of those stocks that I think at least last 5 years, it really sold off in 22. There was two big reasons there. One, it was a bear market. All stocks were selling off. Two, they really went big on the metaverse and they didn't achieve return on investment. And it became a huge opportunity. I mean, buying Meta below $100 a share, any share you bought in that time, you can multiply that times 6 in 3 years' time. So that was a very, very good move. And each time, sells off, it's a good buying opportunity. Even this occasion, I think, is a buying opportunity. So I'm thinking Meta is going to be just fine so long as they keep growing their revenues and keep just cranking out all that profit and free cash flow. As we look at their quarterly actually got better. Look at that number, 26% growth on a big, big business in the quarter. They did $51 billion. This is not a small cap. This is a big, big cap. And if they come back this go around and say, oh, yeah, we grew by 26%, I just cannot see how rational investors cannot look at that and say, holy smokes, that is a really terrific business. And if you got a chance to take a look at that video that I put out there, that really talks about how to look at an investment high level and see if that company is really desirable, what their moat is, what are the competitive advantages. And Meta is so big that their network has become the moat where, just to put it simply, like my family's on Meta. And I just got an announcement yesterday on one of my niece's little girls. She's got a neat event coming up in her life. And boy, we're all over it. Well, where are we going to go? It's not like we're going to pick up and move to some other platform. No, we're on Meta. We are locked in. And that's just one little micro example. Those are playing out everywhere. So that network power is going to keep Meta growing. And if you're growing and you're making lots of money as a company, and Meta has a gross margin of 82%, other businesses would love to come in and take a portion of that market share. We would love to get 82% gross margins. We would love 31% profit margins. Okay. But can you come in and take piece away from Meta? The answer is going to be really, really, really hard. It's like, people aren't going to move from one social platform to another. The most recent, I guess, threat to Meta, and it wasn't a direct threat, was TikTok, because TikTok presented a new experience that was taking a lot of eyeballs. And that, ended up not being such a big headwind. I think both YouTube and Meta met that challenge and are providing short form videos and so forth. So I just think very highly of this business. It's not because, I just think Facebook is awesome or anything. I don't spend a ton of time on it. I get notifications, and again, my family pulls me into Facebook. And my nieces, they used to get on my case because I wasn't on Facebook enough. And now I am. I don't want to get sent to the principal's office within my family. Looking at the forecast, they're supposed to keep growing. So 26. Now, let's take a look at this quarterly here. What are analysts saying about? So the quarter that we're supposed to hear in, what is it going to be, about 7.5 hours or so, they're supposed to grow at 23%. So that's what the market's expecting. That's a good growth number. That puts them at $59.46 billion of revenue. The earnings per share is supposed to be $8.37, which is growing. And they're supposed to, I don't know how much guidance they're going to provide next year, but we'll see. Next year, or I should say the next quarter, growth of 23.68. This is really good. Okay. So if they come in as expected, hey, we're growing at 23 and we're probably going to grow at 23 and we're going to make lots of money. Okay, great. And and it's not showing the PE ratio. They usually do. I guess stock analysis changed this particular form here, and they used to have the PE ratio right here. So these guys, let me go back to the PE ratio over here. PE ratio 29, forward PE 23. Okay, so a 23 PE ratio is below the average S&P. Growth rate of 23% is above the average. Gross margins of 82% above the average. Net profit margins of 31%, way above the average. So you're seeing a stock that is clearly positioned to go higher and maybe get that PE ratio towards 30. So I think it's going to be a pretty strong move higher on fundamentals. Now, if Zuckerberg and company say the right things, we're on our way. If they say the wrong things, we're going to get hammered. We say we because, again, I own a pretty good portion of Meta in my portfolio. I like, what is it here? Meta's 10.7% of my portfolio. So I'm looking forward to this earnings. I think they're going to be fine long term. I really like the business. I think they're discounted. And, they were getting, before we had this big sell off, they were going towards fair value. But at this moment, they're discounted by 24%. And I adjusted everything after they announced. which brought down their free cash flow. I'm actually keeping their cash flow flat until I hear otherwise. So if they're like, hey, we're not going to spend as much in that data center and we're going to take more of that cash to the balance sheet, okay, great. It's going to improve this number. But for now, it's discounted. I think it's a good opportunity for me. And I'm looking forward to the earnings. We'll see how they do later today. So Meta, big name. Looks like Mike is on. He's saying that Wix is on the move. Get out of the way, Meta. We got to talk about Wix. This is a discounted stock. It's moving higher. Did it announce today? No. What's going on? So they're going to rebuy shares. Overall, Wix has been beaten down. It's growing at 13% top line. It makes money. Look at this earnings per share. That's so low. And it's not a business that's been contracting. It's a business that's been growing. It's a small business. We just looked at Meta. Meta's 25 times bigger than this. But this is a terrific growth company. And its gross margins are good. Profit margins are adequate. They are continuing to grow. And free cash flow is terrific. So I have Wix discounted along with a lot of different software companies. These guys provide software that enables small businesses, people to have websites that look really impressive. So I don't think that's going to change, but the whole narrative is, well, with AI, it's going to change things. I agree, but is it going to disrupt Wix? No, it's probably going to make it the experience of using Wix better. You're going to go on Wix and be able to set up your website that much quicker. Thanks for noting that, Mike. Looks like Wix is on the move. All right, so earnings today. Later on, we've got Microsoft, Meta, Tesla. Those are big, especially Microsoft. They're going to say a lot of things that are going to affect semiconductors. They're going to affect the neo cloud companies like CoreWeave and other software stocks. Meta, we just talked about Meta. I don't think Meta has, and Meta will affect semiconductor stocks to some extent, because if they say, hey, the heck with it, we're going to spend a lot of money in the data center, that's going to help semiconductors. If they're like, hey, you know what? We're not going to spend that much. In fact, we figured out ways to do it less expensively and so forth. Maybe that hurts semiconductors a little bit. And then Tesla is the wild card. They're going to talk about robots. They're going to talk about how they're going to sell robots. What were they talking about a year ago or two? 2 years ago, they were saying that they're going to dominate robotaxi. Well, that hasn't happened, right? The company that's ahead is Waymo. In second place is Zoox from Amazon. And Tesla is testing their cars in 2 cities, but they don't have a service that's fully running right now. So, investors that like Tesla, they don't hold the timeline, the accountability on timeline. They just love to hear the stories, I guess. I'm not a Tesla investor. And we'll see what stories are told later today. The fundamentals do not get me anywhere near their valuation right now. So I'll let other investors invest in that. I am an investor in ASML, picked it up at the right time, and it looks like their stock's trading higher. We can take a look at that one. After the market closes, Lam Research, semiconductor, materials, machinery, IBM. And IBM's been doing well overall. GEV looks interesting, AT&T, and then ServiceNow after the market closes. That one will be interesting to hear what they have to say. Progressive, Starbucks is moving higher. And you see that we got a lot of earnings. Waste Management after the market closes, Elevance. A lot of earnings to go over. Okay, so we have some requests. We've got Zealy wanted to look at CEG and TLN, and then Sam wanted to have us comment on United Health. So we can go all over those. And let me see if we have any more messages here. So DJ, good morning. So GLW. Let me note that, and we'll look at it. All right, so let me start with UNH. That one there is not a good situation. Yesterday it was down 19.6%. And this stock was beginning to recover from just some real lows. But it really just dropped off here with the announcement of the government taking away, or I should say, the government holding the premiums that United Health will charge on the Medicare Plus programs, the premium Medicare programs. Now, they have been growing their top line revenue, but they're expected to grow about 2% in 2026. I think that was also on investors' minds as they evaluated, hey, you're going to grow slower. And they're also insuring fewer lives. If you watch the video I produced for members, I kind of break that down. I think they're trying to take a step backwards to take a few steps forward and become more profitable. You look at their growth and profit, it does look impressive over the next 3 years. But we're going to need to let that play out. I think it's going to take some time. The growth on net income, you see that growth? That's really good. Earnings per share is growing. That dividend looks good. I owned United Health for many years, and in that time, they would pay like 1%. It was not a dividend stock in my mind. It was like, yeah, they pay a dividend, but it's not a whole lot. And I really like the appreciation that I experienced, from 2016 to I sold them 2022 on the occasion when I owned it. I really like the appreciation run. I just ignored the dividend. And these guys now, with the stock being hit so hard, the dividends become attractive. And it's discounted according to the analyst. I think it's discounted, but it's going to take a little time. This space is it's been really roughed up, and I don't see any big positive stories coming up. And United Health, let's take a look at the forecast. So for the year we're in, 2026, they're going to grow 1.5% top line. Their profitability is going to grow by close to 9%. And then see this growth here. I think this is what they're trying to do is, hey, we don't want to necessarily just grow and have a bunch of, new revenues that bring down our net profit margin. We want to grow that bottom line, and that's what they're going to focus on, bringing down their PE ratio quite a bit. So that's what their strategy is all about. And I think that United Health is discounted. It is, let me show you my valuation on it. It's got a nice discount of 32%. And the stock is moving a little higher. We'll see how it performs over the next couple months. But I think that whole space, health insurance payers, I think speaking for myself, it's a little bit too much of a drop for me to be willing to put more capital to work here. I'd like to give it about a month's time and then revisit this. So for now, it's discounted, and we'll see how it trades going forward. Speaking of which, can you take a look at United Healthcare, Daryl?
So I did a full video on this one before all this happened. I happened to post it about 15 minutes before the government made the announcement about the reimbursement rates, and it dropped 10% after hours, and then 20% by the end of the day. But I shared some thoughts in that video if you're interested. So yesterday we did take the big drop. So you can see all the news, negative news they've had, and the blue ones are positive news. I decided to change the color so we could quickly see what was negative versus positive news. So they had broken out above a couple of trend lines. They've been consolidating basically since September of last year. Um, they had made it above the 200, and now 2 days ago, we got a 50-day crossing over the 200. Yep, and that is reversing today. Let me zoom up on this picture so I can see it. 330, 78, and 330. So the 50 is still above the 200, but they both started turning back down yesterday, the 50-day. So, wow, the RSI dropped all the way down to 30 from 60. That's huge. That is a huge move. And let me look at how much volume we had. We had 65 million shares trade yesterday, and the 50-day average is 8 million. So 8x volume yesterday. The PPO definitely went into negative territory. It was in bullish territory, and we had a bullish crossover. And this is all changed now. So anyway, I had cut my position in this in half at the end on the 31st of December. So I missed out on some gains of about 7%, and you look like a dummy for a while, but then you save yourself 16. So you never know when these kind of announcements are going to break out because it's an exogenous event. Nobody knows it except Congress. And you can't really plan for these kinds of things.
So
But the
now
one,
I know why all those congressmen sold United Healthcare a month ago is they watched your video.
yeah, they may
It
have,
wasn't
yeah.
that they had inside information. Anyway, carry on, sir.
One of the things that led me to conclude to go ahead and sell is all the bad news that happened last year. They did get finally below fair value. And then, we got Berkshire buying in, some other super investors buying in. They had some news about 70% of their membership could be in a qualified plan that increased reimbursements from the federal government, and they quickly rose above their fair value and even above their normal market multiple. So I was thinking at the end of the year that the news isn't that good. And then I started just looking from a year out. If they continue to trade at their normal market multiple, we're looking at a total return of about 3%. And that's what caused me to just do the sell off. I have some other places I could put that money. I didn't sell my entire position, but I did sell half of it. And this was one of the things that led me to that decision, because I just didn't see the return over the next year or so. And we are in a political environment or configuration right now that doesn't lend itself very well to healthcare in general. So I thought the risk was probably a little higher than I was willing to accept and decided to reduce my exposure. But I am still holding it. I still have my half of my holdings.
Very good. So I'm trying to start a little survey just of everybody who's on the stream. I'd be curious to see what you think is going to happen after Microsoft announces their earnings. Do you think Microsoft's going to trade higher, or do you think Microsoft's going to trade lower? Just curious to see. There's no wrong answer. Just wanted to see what your best guess is. I'll tell you what I think after I read the comments, and maybe Daryl could look at the implied move after we read your comments. All right, we got more requests coming in, and we better start working on this list of requests. But before we jump in there, let's see how the market is trading. The NASDAQ's going higher. NVIDIA is having a good day. Intel's having a great day. Wow. And this space is having a good day. I think the ASML earnings is influencing this. We can look at ASML a little later, shadow guy. And looks like right now, Microsoft, I just asked the question, is it going to trade higher or lower? Right now, investors are waiting to hear what they have to announce. It's only up a little bit. Meta's up a little bit. All right. Tesla's up a little more. The financial space, not doing all that great today. Apple announces tomorrow. Telecom, AT&T had good earnings. All right. Looks good. Healthcare, rough week. We'll see if it ends up being a rough month. Although United Healthcare is up a little bit. So we're starting to put, a Band-Aid, or it's beyond a Band-Aid. Yesterday, a 20% drop. It was not, a bump that we got to put a Band-Aid on. It was like, man, let's go to the hospital. I think it's going to require 30, 40 stitches. So we'll see. We'll see if they could start going higher. It's good to see it bounce back, but we're nowhere near where we need to be. All right. And I heard that Starbucks had a good day, so it looks like they're moving higher. Looks good. The energy space keeps going higher. And I've been hearing some voices out there in the stock investing universe that think that energy could really do well this year. It can, but I would say that every time oil prices go up substantially, let's say we had a $90 oil price on a barrel, I observe that whenever that happens, that money gets taken away from all these other sectors, and other sectors suffer. So, I'm not wishing for it. I'm observing it, and I've got my position in Chevron and Occidental. We'll see how it goes. All right. Looks like comments are coming in on Microsoft. I'll give it a few minutes. In the meantime, let's move over to CEG, which is a request from Zeely. Good to see you, Zeely. Constellation Energy up a little bit. This stock has been up 6% over the 5-year, up a tremendous 666%. Constellation Energy produces and sells energy products and services in the U.S. It operates through 5 segments: Mid-Atlantic, Midwest, New York, ERCOT, and other power regions. So they're generating nuclear, wind, solar, natural gas, hydroelectricity. Okay. So this is a utility. Okay. We know what that's about. They've had a tremendous 5-year run. The run started when, I guess, AI became, hey, we're going to need a lot of power. And the stock's gone higher. Now, what's interesting is the stock has certainly worked for the 5-year, the 1 year, not so much. And their revenue hasn't grown a tremendous amount. Utility space, I think if you're a regulated utility, you can't immediately increase your rates. You need to go, speaking of California, live in California. You have to go to the regulator and pretty much seek approval to increase your rates and show that, hey, our costs have gone up, so we have to charge more. And typically they approve because it's just, the right thing to do. So that process kind of keeps them locked in on their pricing. So the whole revenue only growing 3.6%. That's what I expect out of utilities. It's not like you can go like Meta and grow at 26%. No, it's not going to happen. So that's one of the things I don't like about utilities is they're kind of slow growers. They don't make a lot of money either. And you see that their earnings actually dropped by 3%, and their forward PE is 26, small dividend. Again, the stock has moved over the last 3 years tremendously, but this line doesn't show me tremendous growth on that top line. It's like, well, if these guys are going to start killing it, I'm waiting for them to start killing it. It's like they're supposed to grow like crazy, and they had a contraction during COVID. And I think because a lot of businesses were shuttered. So they were like, okay, hey, you can't run your factory, you can't run your operation. Everybody has to go home. Okay, so less power demand. And then they started growing out of COVID. But after 22, the growth, you actually had a contracting year in 2024. So that is not looking great. When we look at free cash flow, there is none. And that's the thing about utilities is they have to put so much back into their operations. It takes away that cash. They do have profits, but there's no cash flow. And if you dissect the statement of cash flows, the typical line that keeps me from investing in utilities is, let's see here, cash, operating cash flow looks good, but then they have to put 2.7 billion back into operations to keep those generators running. You have to hire qualified people. They should. You don't want accidents to happen. You want the power to be there, especially like right now we have these storms. People need this power or else it gets really dangerous really fast. People could freeze, and that would be a very bad outcome. So you're putting all this money back into the business. I use kind of a make-believe analogy just to keep it simple. Everybody knows what pizzas are about. Everybody probably has a local pizza shop. And if you have a pizza shop and, okay, great, I made money, I sold lots of pizzas, great. But let's say every year you had to buy new ovens. And those ovens, for some reason, they just don't last. And every year you have to put all your profits and then some back into those ovens. Well, pretty soon it'd be like, man, I don't want to run this pizza shop. I'm kind of just a slave to keeping the operation running. And that's what I don't like about utilities is this line. This line's too excessive. If you go to Meta, there's no cap. They do have CapEx, but nowhere near the level of operating cash flow. So, and they have these other lines that are kind of bummers. Contributions to nuclear decommission. Well, that's not good. So for me, the utility business, no thank you. I don't get it. I don't understand why I don't want to be an investor. It's just not the type of business I want to be in. And I'll let other investors invest in this space. I think I have a valuation on it, but let me kick it over to Daryl and I'll check my valuation, see if it's current.
Okay, I drew some lines on here, and all of a sudden they're still here. One of the first things I see about Constellation Energy is they have prices that are running higher, at least up through October, and they're starting to lose some steam here. They're trading below a 200-day that's upward sloping. 21-day cross below, 50 days declining. But one of the more relevant things that I see is they are in distribution mode and have been in distribution mode since the 30th of May. So I don't really, this is a consolidation, but it's more of a distribution. So institutional investors are starting to move out of this one. And that's always a little bit of a cautious sign to me. We also see higher prices. We see less momentum, and they're currently at an RSI of just 32. They had not been that low since the right before the tariff announcements, and then when the tariff announcements were made. Money flow is negative. So I'm thinking for the time being, this one has probably run its course. Let me, they've had a super run, but I think for the short to medium term, I think they probably run their course.
All right. Thank you, sir. And I did not have a valuation on Constellation Energy. So we are going to create one and we'll go through each step here. It might be a quick little lesson on how I use this model that I created to evaluate companies based on their cash flows and what I expect they're going to do. I'm trying to timestamp my evaluations. It was good feedback provided by a member on the member call saying, hey, could you put that timestamp so we know when we had this valuation done? So pop that in there. Okay, so got that ready. Now I'm going to keep a discount rate of 8%. Now, if you saw Meta, it was 7.5. This is just a riskier business. They're generating power, and a lot of bad things can happen. Like this storm that came through. I'm happy that the reports were that there was plenty of power for everybody. But if you recall in Texas, like, I don't know, 4 or 5 years ago, we had a bad storm and there wasn't enough power and people were really, really put at risk. I'm sure those utilities were really put under the gun there. So that kind of stuff can happen in this industry. All right. So free cash flow, we're not going to have any of it. So let's take a look, and I'm going to look at a screen that you guys can't see. So I can do my data entry here. And when I look at their free cash flow, yeah, they've never had a free cash flow year in the last 5 years. So we're not going to have any cash flow here. All right. So this one here, this part of the model, we're going to just kind of ignore. But let's look at earnings per share. If you really did want to own a utility, how would we value this company using earnings per share? And I'm going to use 2026 numbers. The revenue is expected to grow 12% this year, and their earnings per share will be 11.36. Growth next year is going to be good, and their growth is looking good. It's looking like it's going to grow at 15 and 26, so we'll go with 14% growth. So it's discounted by 7% if you just use earnings per share. If the market keeps liking utility companies, hey, this might be a good investment, but it's you have to read into the market's desire to own utilities. And right now, the stock's providing a little discount. I think it's got some good years ahead of it if you measure it by how well they're going to grow their revenue and how they're going to expand profits. For me, it's not, like I mentioned, I don't like utilities, so I'm going to stay out of it. But if other investors have been making money on this, and good for them, good for them. So that is CEG Constellation. And I'm going to add that to the watch list so that we have a reference point there. I'll do that some other time. Constellation Energy is selling off a little bit. Let's move over. So we went over UNH earlier, and DJ wanted to look at GLW. What is GLW out about? Hold on a second. Elevance is up 3.43. They announced their earnings today. That's a good sign. All right. Go ELV. Okay, so I'm going to hit GLW. That's Corning. Now, I think they had some news where they're creating fiber optic lines, I believe.
Yeah, they got a contract with Meta.
So they have high-speed fiber optic lines that are going to be put, huh? And I guess that makes sense so that as people use Meta, there's no delay. There's it's just very quick and the experience is very positive. These guys 123% rise. Wow, this was a good pickup. And they're Corning Incorporated, so GLW. Okay. So Corning Incorporated.
They make Gorilla Glass too for phones.
Uh-huh. Wow. Interesting. So they started in 1851. So they were reclassified. I don't think they had technology. We didn't have a technology sector in 1851. I don't think, but I could be wrong. All right. They're having a terrific year. They are growing nicely, 19%. They're growing their profits as well. Looks good. Forward PE is a little expensive. The growth in 2025, and did they announce their earnings today? They sure did. They announced their earnings, and their growth is really good. Looking at the quarterly, growth is very good in the quarter they just announced. Free cash flows there, 1.4 billion. Gross margins are a little low, 36%, because they're making a product. They have factories, they make stuff. So it's not as profitable as other businesses, but they are kicking out a nice net profit and they do have cash flow. So these look good. The forecast for their business, analysts think they've gotten a little too expensive. And the growth, 2026, you're supposed to grow at 12%, then 10.5. Their P ratio is high, and the profits are going to grow. This does look high. Again, I showed the gross margins, the net margins. You can buy Meta, and you paint a P ratio of 22, and you just get these awesome margins, awesome cash flow, better growth. So it's like, I'd rather buy Meta versus this business. So that's what I'm thinking. I'm thinking they're too expensive. I agree with the analyst. What do you think about this particular business?
Okay, when we look at 5 years worth of data, I'm going to put my cursor about right there. And we can all see what happened. They had been trading sideways for at least a couple of years. Then in October of 2023, they really shot up from about, their low was about 34 up to 111 at the moment. And this is when OpenAI made their announcement. So you're seeing the AI effect here. So let me go into just 1 year. They are trading above moving averages that are in the proper order, and they are all moving higher. They did announce a contract with Meta that sent them up, and then they announced earnings, and that's sending them up even higher. They are in an overbought condition at the moment. PPO is bullish and in positive territory, and accumulation is at a 52-week high. Money flow is positive, but you can tell right here that they are very extended from their fundamental price, the orange line, the fair market value, and the typical market multiple, the blue line. They are very extended above that. So there's some risk here. You need to be careful if you're buying it at these levels.
Yeah, I think so. I think they were bid up due to the storyline. And speaking for myself, right, we replaced our high speed internet. We we went from copper. We used to have DSL like like 25 years ago, maybe. Yeah, we got it installed 27 years ago, and then we upgraded to cable, and that was a good upgrade. We went from, I forgot what DSL speeds were, but the cable company got us I think it was 200 giga giga speed, and then I went to fiber more recently, and I was offered 1 gig speed, and but I went 500, which is fast enough. Now I'm on fiber, so I went from copper and ended up with fiber, or yeah, and that's what these guys produce. So that's a good idea. That's totally a good idea. All right, so I just wanted to add that utility business over to our watch list, and we will monitor this valuation here.
Two other names in that space for cabling in data centers is Credo,
Uh huh.
CRDO, and Amphenol, APH. They both have very similar, they all three have similar looking charts.
All right, so let's take a look at SLB, and SLB might be moving. I would have thought they moved higher. So they are supporting the energy industry and digital and integration, reservoir performance, well construction, production systems. Yeah, these guys are a big, big company that helps the oil industry. They're more of I consider them more like a construction or a service provider. They are not extracting oil and selling it. They're helping the oil industry. $75 billion market cap. Revenues have not been doing well because the oil business has not had a great, previous 12 months. Oil prices haven't been all that high. Their profits have been going down. So when we look at this run, I think the whole Venezuela and geopolitical tension with Iran, we got Russia, and the trade restrictions on Russian oil. I think that's what created this run. Okay. The expectation that oil companies are going to contact SLB and say, hey, we need you to help us either build a well site here or there, or maybe refurbish one. All those things are potentially in play. That's logical, totally logical. So the stock went from mid 30s to 50. If oil keeps rising, SLB stock will keep rising. It's pretty simple. And these guys did have back when oil prices were fairly high, 2022. Look at their revenues. And then oil price started to come down and the revenues came down with it. Now there's probably it's hard to time because oil companies, these investments are huge. It's not like, hey, we're gonna create an oil site over here. Let's throw a couple $1,000s at it. Nope, you're throwing hundreds of millions at it. So they really weigh that carefully. They want to make sure that well site's going to be really, really good, and then they move forward. They do have good free cash flow. 4.3 billion. Their margins, this is a service-based business, so it's not very profitable, but they do kick out a net profit. They pay a dividend as well, so that looks good. And analysts think they're fairly priced. I think they're fairly priced. It's not a stock for me. It's done well because the COVID days, right? They kind of throw us off. Back in COVID, something that never happened in my lifetime, which was oil prices went to zero. They didn't have enough storage because these oil sites, they just keep pumping oil. Well, all of a sudden, the world said, hold on, everybody go home. And nobody was driving. At that time in California, I'd go visit my mom every week. And she's now 90, but at that time she was, I guess, about 85. And we'd sit in her porch and catch up. And the freeway for me to get to my mom now takes me about an hour. And when nobody was driving, it would take me like 20 minutes. Man, there was people flying on the freeway. We were going, I would keep it at 70 miles an hour. But let me tell you, I was pretty much on the slow lane because, other folks, the California Highway Patrol was having a problem. They started issuing out notices. Hey, we're going to start pulling you over, especially if you're going over 90. And that's how there's few cars on the freeways, and oil demand went through the floor. And when that happened, it was a weird situation for oil companies. It really put them at risk. Schlumberger, SLB, they used to be called Schlumberger. Look where their stock went. Boom. So when we look at a 5-year, we're looking at I think a artificially affected chart. We really should be looking at, hey, these guys were really high back in the day when oil prices were higher. I remember in this era, Exxon became the most valuable company in the world. That was, I think, during George W. Bush's presidency, and he was from Texas, and he did help the oil industry. Just calling the balls and the strikes. I happen to like George W. Bush. I'm an oil company investor, just kind of giving you a little bit of history. But from there to here, Schlumberger has not been an investment that I want to be in. So that's where we're at with this company. I'd rather be a Chevron stockholder or Occidental stockholder because those guys, they do make lots of money when the oil goes higher. They have better margins, but that's my opinion. What do you think on SLB, Daryl?
This is not one I invest in, but they have been on quite a run here recently. We have all the moving averages in the correct order, and they're all moving higher. They are overbought at the moment. We got a buy signal back at the beginning of the year, probably right around the Venezuela activity. We do have accumulation moving a bit higher. Looks like it's at a 52-week high. Money flow is currently positive. We step back maybe a few years just to see where we've been. These are highs we last saw in 2024. They have been on quite a decrease over the past couple of years, but they have finally reversed the downtrend on this 200-day, and it is moving higher at the moment. We're getting pretty close to, let me see what all-time highs would be. Probably around $86 or so. They're getting ready to get pretty close to levels that we've seen at least three or four times that they've hit several times. So you're going to start facing resistance probably about at $58 a share or so, if I were guessing. But they've had a good run this past month. They're up about 32%.
Yeah, I think it's the stories around the oil complex. Is it going to see higher oil prices? And I looked at it earlier today. I mean, it oil is going up, so maybe SLB is getting more requests. I have a valuation on SLB on the 11th of November. If I use that valuation, we're at a 9% premium. So the stock has moved. Let's update it because they announced their earnings earlier in January. And
Last Friday.
yeah, the 23rd. So I'm going to look at their data and we're going to update it. First off, I think I'm going to move their discount rate down because interest rates are coming down. And let's take a look at their free cash flow rate. Their free cash flow including the quarter that was just announced, it looks like the free cash flow is better. So it's 4.3 billion. So that's going to help the valuation. So $4,360,000,000, growing at 5%. Is that 5% a good number to go with? Well, if I look at their forecast, yeah, it's still a good number. I can move it to 7 because their profitability is supposed to expand better, and I can't argue with that. I think there's probably more demand for their services. All right, so timestamp this, then we can compare it to the previous valuation that I copied over here and see how this thing is evolving. And for you investors out there, members that have access to the terminal, when you look at especially the super investor terminal or even the advanced investor terminal, you'll see this off to the right. That's because I'm going to timestamp them and then we can kind of see how these valuations evolve. This is the one from November. Now this is the one that we're doing right now, January 28th. Okay, so this line got better. Let's take a look at that balance sheet and see if SLB is keeping their balance sheet in good shape. And it looks like they did add some cash. That is good. And their debt is a little lower. That's good. So based on cash flow, this business is looking good. Looking good. Cash flow is good from their business. Now, when we look at their earnings per share expected for 2026 is $2.95. So we were not far off from that number previously. And the PE ratio, I'm using a 12. Investors are willing to pay up for this stock. Not me. It's not a high margin business. It's not a growth business. The story is positive for them, but that's all I could say about that. And I'm going to move this number to 9. So on profitability, I don't think they're priced right, but their cash flows are really good. So combined, SLB is discounted at 19%. I think they're probably going to trade around the stock price where they're at now. If the story continues that, hey, oil prices are going to keep moving higher, maybe it goes up higher. But that's where I'm at with SLB. Thanks for asking, Cody. ASML is the next one. Shadow Guy. Good to see you, Shadow Guy. He's saying that it was trading higher. What happened here? It was pre-market. This stock was up like 5%. Is there like a little bit of a head fake going on here? So, yeah, that was a little bit of a head fake. I'm an ASML stockholder. And let's see here. So market cap, this is a big market cap. This might be the biggest market cap company out of Europe. 562 billion. And they grew their top line revenue 15.6%. net income grew 27%. And these guys have a massive competitive barrier. You want to compete against these guys? Good luck. These guys made big bets 20 years ago. And they make these machines that are larger than a bus. And those machines produce semiconductors. And now the semiconductors are so darn small, they use all kinds of technology to create these incredible business. And I did buy into this company at the right time, and I'm sitting on a nice gain that didn't take long for me to make that money. So let's take a look at their forecast here. This business is supposed to keep just growing 6%, 15, 10, 14. Very good. Profitability is going to expand, and it's going to trade in the mid 30s. So it's gotten expensive, frankly. And I'm going to show you my valuation, and we'll update my valuation because we have new numbers. But I've been sitting on this stock going, geez, the stock has gotten expensive. I think, before I make changes, and actually updated it yesterday. Why did I update this yesterday? I guess I was expecting the earnings this morning, so I started to do my homework. And I'm going to have this as a reference point, 32% premium on ASML. So that's expensive, but the stock has been going higher. ASML, geez, just over the last couple months has really moved higher. So we see ASML good, 110% appreciation over 1 year, but just really over a couple months, this thing's up almost 50%. So it got expensive real fast. But let's see if maybe the valuation is looking great for ASML. I'm going to look at a screen you guys can't see just so I can look at free cash flows and stuff. And let's see if stock analysis is yeah, look at that. They updated everything. Nicely done. Stock analysis. The business is growing by 15.5% on the top line. Free cash flows look really good. Free cash flow is 11 billion. 11. Is this in euros? I'm going to have to check that. It's in euros. So we got to update that number. So euros news break, Daryl. The euro is gaining on the dollar.
Uh-oh.
The dollar has been losing value, right?
Yep.
All right. So we'll convert that guy over to US dollars. All right, we got that squared away. Looks good. So 10% growth. I could probably do a little better on that. I'm going to go to 12. All right, let me check the balance sheet, see how that's looking.
It's at the lowest value we've had since early 2022.
Oops, put in the wrong number there. And 3. So they've been buying back shares. That's good. All right. So on cash, I can't get to their valuation. Stock's been moving higher real fast. Analysts think it's fairly priced now. In 2026, their earnings per share is going to be €27.33. And that's what we have. Growth rate of 15%. That's good. And I'm giving them a pretty expensive P ratio of 32. I'm going to trim that back a little bit. So I think they're too expensive. I'm holding my shares, but ASML is expensive. That's where we're at with ASML. Incredible business. All right. So let's take a peek at the comments. Curious to see if people are weighing in on Microsoft. Let's see what's happening with Microsoft here. It's flat. Meta's flat. Tesla's up 1%. Okay. Okay. So, all right. Lots of comments. All right. Let's see here. All right, so I'm going to look for the comments. Do you think Microsoft stock is going to trade higher or lower after they announce earnings?
I only saw a couple, Victor.
So Jan's going higher. What do you think, Daryl? Higher or
I
lower?
think it's going higher.
Okay, so we got two hires. We got a volunteered hire on Meta. All right, cool.
I do have the implied move on both of those.
What's the implied move on Microsoft?
5.1. And for Meta,
5.1%. So we're going to see
Yep.
some action, huh?
Yeah, let me see what Meta is. 6.7. And their short interest is about twice that of Microsoft.
Whoa. So we're going to see some action tonight. Hey, Tomas, good morning. Good to see you. All right, cool. So, man, I think Microsoft's going to trade lower. I think the stock, I'm kind of reading the tea leaves. So this stock for a while was like just doing everything right. Coming out of that bear market, it was just on a tear. It had that partnership with OpenAI. It had its data center coming. And then boom, it's like hasn't been keeping up with the S&P, hasn't been keeping up with its rival major cap companies. And I think what's brewing over in Redmond, Washington is that their core business, I think their core business being software, right? Windows. Well, PC sales are not going through the roof. Okay, well, that business isn't doing great. You've got so their applications business, their software business, I don't think is clicking all that fast. Second, the AI story and how software companies are getting hammered. Maybe the investing community is going to be like, well, maybe Microsoft's going to get hammered, and a lot of people are going to stop using Excel because you could just use like Gemini or Chat GPT or whatever, or PowerPoint, right? Like, who needs PowerPoint anymore? You can just have AI do presentations for you. So we'll see. My guess, total guess, is it's going to trade lower. We'll see. All right. So Mike, the dividend investor guy, wanted us to take a look at PayPal. PayPal, what's it been doing? This one here, this has been, just a stock that surprised me. It's worth a lot. If you look at the numbers look good. The market just doesn't like this stock. It's like, hey, stock market doesn't like PayPal. And it's a $51 billion market cap. Not too long ago, it was much more valuable. It's growing its revenues, almost 5%. It's growing its profitability nicely, double digit. starting to pay a dividend. Forward PE is down below 10. Analysts think it's discounted. What's happening going forward? Let's look through that windshield and see, are these guys supposed to start growing? What are they going to do? So we're in this year. When will they be announcing? Do they announce their earnings soon? Next week.
February the 6th.
So they'll be announcing next week. And when they announce, it's expected that the full year will grow by almost 7%. And they're going to be a steady grower, and their profits are going to grow nicely, double digits in most occasions. They're supposed to announce really good earnings here. The fourth quarter earnings, look at that growth rate on earnings. Very good. So what gives, stock market? Why do you hate PayPal so much? What did they ever do to you? Because it's worth a lot more than its stock price. It's some stocks. I sold PayPal because I didn't have answers. I had more questions than answers. Why does the market hate PayPal so much? How could it such a severely discounted stock be traded this low for forever? So I'm like, all right, market, you tell me when it's even going to be a good time to buy PayPal. I will be attentive. And when you tell me in the form of it starting to rally higher, I will join the party. I might show up to the party a little late. I might show up, after the first band played a few songs. But hey, the party is going to last for a long time on PayPal, in my opinion. So let me kick it over to Daryl and see what he thinks.
They're definitely in a confirmed downtrend. 200 days declining, 50 days declining, 21 days declining, 5-day moving averages declining. They're basically at a 34 RSI. They have been above 40 a couple times, but they really haven't been above a 50 since the day after whatever happened here. I guess that was their earnings last time. Now, this is actually what I expect Microsoft to do. They're going to shoot up and then maybe trail off. But anyway, they shot up and then started a sell off, and I am talking, it was a drastic distribution, and it does not look to be slowing down. So I'd be very wary of this one. Money flow is negative. They're at lows we haven't seen. They're lower than they were at the the tariff announcement lows, and they're below levels we even saw in early 2024. Let me go back a little bit longer. Yeah, they're okay. They're at lows we last saw in 2023. If they break down through that, then you're going to be at levels we haven't seen since 2017.
Yeah, I don't know what could kick off a rally in PayPal. It's been a tough one to figure out for me. Got more questions than answers. So we had a comment come out. I forgot who put it out there that Futu is going higher. They are in partnership with the NASDAQ. So they're trading options trading on the NASDAQ. They participated in the BitGo IPO. This has been a fantastic stock, although it's been consolidating for a couple months, I guess for about 5 months. But this thing's been a winner, 8% after really selling off. But looking at this stock, I mean, you could have picked up shares for less than $40 a share, and then multiply your money times 4, multiply your capital times 4. That is a beautiful move. Futu, if you don't know, is a think of Robin Hood, but think of a Robin Hood that started in Hong Kong and supports, provides trading to people in China, Hong Kong, Asian countries, and they do a great job. And there's big saving rates in China. I look at the statistics, and people save their money out there, and I'm sure they're beginning to see, hey, these investors over in the Hong Kong Stock Exchange, man, they're making lots of money, 35%, 50%. I want a part of that action. So they're investing using the Mumu app over in Asia. They're growing at 87% top line. Look at that earnings per share up 120%. The again, the China market stock market is doing great. It's outperforming the US by a pretty good margin. And analysts think this is a discounted stock, even though it's been going higher. You see a lot of green on the screen here. Now, they're not gigantic, but they're pretty good size. This is in the Hong Kong currency, by the way. So just an FYI. When I look at this screen, and we're going to US dollars, very good. So analysts think there's still 23% left in Futu. Now, these numbers, we only have a few, well, we have a lot of analysts commenting 14.5 growth, 14.5 growth with profits going up. Now, I think there's probably the forecasting is looking at kind of a pause in this market. We are seeing somewhat of a pause in the US market, not like a hard pause, but you see like the Mag 7 stocks in the US not getting a lot of investment right now. Like Meta sold off as an example. Even Microsoft hasn't been keeping up with the S&P. And maybe some of that is influencing this. I happen to believe I'm a Futu stockholder. They're going to outperform that forecast. And I think they're probably going to do better than 14.5 just because the stock market in Asia is doing fantastic. So why would it be slowing down? People don't want to make money? No, people want to make money. I think most everybody who's showing up to this live stream wants to make money. So why wouldn't investors in China want to make money? So they're going to keep investing. Maybe not investing in PayPal, but they're going to keep investing in stocks that are in Asia. And I think that Futu is discounted by 47%. So I have a good position in Futu. I'm not buying shares right now, but man, maybe I should start buying shares in Futu because it's looking really good. It's looking fantastic, in fact. What do you think of Futu? What are you seeing on the charts for this company?
Well, the three shorter term averages are all down sloping at the moment. The 21-day peaked out on around between the 12th and 20th, closer to the 12th. Started to roll over. The 50-day started rolling over right around the beginning of the year. They are bouncing up today, 4%. I would not be surprised for them to get down to this 200-day. They have drifted below it. This was during the tariff announcement, but last year they had touched that 200-day several times. The 200-day is actually still increasing. So if I were looking for an entry point, I would be looking to enter when those are almost matching. It did on the RSI, it did hold the 40 line and has reversed and is now moving higher. Not quite 250, so it's still in bearish territory. And we still have a sell signal on the PPO. We've been in distribution since the 3rd of February. We've been in distribution mode. You can see the money flows are negative with the exception of a week here in November. The money flows have been negative. So I think if you're patient, looking for that 200-day would probably be a pretty good entry point.
All right. Thank you, sir. So the next stock is Embraer. This is an aerospace and defense company, mostly, I think, doing commercial aircraft and maybe some civilian aircraft. And this stock's been flying. It's 89.7% rise, 1,000% rise. It really sold off during COVID, right? We didn't have a lot of demand for airplanes. And boy, whoever understood this company is flourished. Congratulations. This is a stock that's hard to value for me because it's everything's in the Brazilian currency. I don't really know this business all that well, but let's take a look at some of the fundamentals. Free cash flow looks positive. This is in the Brazilian currency. Margins are a little tight, kind of low, and they do have some profit. So that top line growth looks good. But man, this stock has really flown up, huh? Pardon the pun. Look at that, flown up.
Mhm.
Um, in their balance sheet, how much debt to EBITDA do they have? So balance sheet, not too much debt, looks good. So debt to EBITDA looks okay. So this one here looks like, it's not early in the trade. It's you're showing up to the party when, you know what? There's only a few appetizers left on the serving trays. The last band is on the stage and finishing up maybe their last set. This is a little this is late in the trading of this stock. Um, and I would think that it's priced a little too high at this point. What do you think of this Brazilian airplane company?
Let's take a look at the charts. We can look here, and according to Fast Graphs, their price is way too high. So there's some risk built into this one. Their fair value is closer to 30, or excuse me, their normal market multiple is closer to 39 and 25 for the fair value. So let's look at them on the charts. And the one thing I immediately noticed, let me give you an example. RTX is also priced way above its fair value, but I still trade that one. And the reason I do is it trades in a trend channel and has for the past year, and it bounces off the top of that trend channel, goes to the bottom, goes to the top. So I buy and sell when it goes through that cycle. So I wouldn't be afraid to necessarily trade this one. Just know up front it's overvalued and you're going to have to be careful with your stop loss values. But one of the things that I see is look how many times it has tested or came down below that 50-day moving average. And it's probably 10 or 12 times I see across here. So they're extended above the 50-day right now, about 18%. I would trade this one just like I do RTX. I would just be patient, wait for it to come down to the 50-day, pick up some shares and just wait because it just oscillates around that 50-day. They have been overbought for the last couple of weeks. Let me go into just 1 year. So they have been overbought since the 7th of January. They did come out of an overbought condition. They're coming back down to the 60 line. We're starting to get a turnover in the black line, which is a 12, 26 day, the difference between the 12 and 26 day moving average. It's starting to move down closer to the signal line. When it crosses below that, it becomes a sell signal. And if you get both a 50-day below the 50, or excuse me, the RSI below the 50, and you get that crossover, you have two indicators telling you that there's probably lower prices, which means it could come back down to this 50 line. That's what I would be watching for. The money flow is currently positive, but starting to lose a bit of steam here over the last week. But it's an expensive one.
Yeah, it looks like Ben 10. He played it right. He made some money. Congratulations, Ben 10. Nicely done. All right. So let's start wrapping things up. Looks like the market, Nvidia is trading higher, and some other semiconductor companies are going higher. Software stocks are bruised, battered, and they are coming back a little bit. But man, these stocks have been punished. We've got computer hardware doing really well. Microsoft's under a little bit of pressure. Meta's going up a tiny bit, and Apple is down a little bit. Amazon is down a little bit. Good day for me to buy some shares. I am building up a nice pile of Amazon shares. And I think that what we saw with Google is what we're going to see with Amazon. I think when we see the top of the list here, and as I look through the windshield and look down, 2 years from now, I think it's going to be Google and Amazon that are 1, 2. I don't know who's going to be in first or second, but these are the most powerful businesses in the market that have terrific strategies. The e-commerce business, nobody's going to argue, dominant by Amazon. Dominant. Their cloud business just cranks out profit. And they have other businesses. They have their streaming business doing great. Their advertising on streaming looks fantastic. They even advertise on the Amazon e-commerce platform. So the retailers on Amazon bid to put their ads. So when somebody says, hey, I'm looking for, name the product on the Amazon.com platform, advertisers are putting in their bid to advertise. I mean, that's just such a freaking awesome idea. So I think this stock here has not been participating in the big run because Amazon culturally, they don't groom their financials. They care. I think they care about like earnings and they care where their stock price is at. But what they're obsessed on is making themselves more powerful, stronger. Customers just, everybody shops Amazon.com. Everybody. And if you don't know if you're running in AWS, but chances are whatever platform you're using, there's a lot of businesses that run on AWS. Their robo-taxi business is exciting. And, physical AI, later on, we're going to hear a colorful story from Elon Musk of how he's going to create robots and everybody's going to be buying them. And incredible. Man, the future looks so bright. Amazon doesn't say anything about the more than 1 million robots they have in production as I speak in their logistics centers. They have been using robots for a while. They are getting better and better at using those robots. So just imagine if Amazon starts, well, first, they're going to be more efficient in their distribution. But what if they start adding that to their AWS product listing and say, hey, if you run a logistics center, you want to use our robot platform, we don't talk a mean game. We play a mean game. We'll show you our operation and you'll see that you could use similar robots in your production. Game changer. So that's one where I think that one there is it's going to be a top 2 stock. We'll see who's going to play for the number 1 spot. But I think NVIDIA is a great company, but it's just a one-trick pony, semiconductors. If we have any kind of pullback in the data center and companies can't afford the expensive semiconductors, They'll probably either stay where they're at of their level of valuation, but I think they're they're uh, they're not going to do as well as Google and Amazon. Microsoft's a little too caught up in their legacy business. Their business started, geez, what, 60 years ago?
Pretty much. Yep.
So it's no, not 60 years ago. 50 years ago. Man. And that's a long time ago. Apple, I consider them a one-trick pony. iPhones are iPhones are bust. And down the stack here, I don't see anybody that's going to rise to the top. One-trick pony, one-trick pony, and a lot of tricks out of that pony. um, so we'll see. We'll see. But Amazon, I think, is an opportunity for me. So I'm going to keep buying shares, keep loading up. All right. So any departing thoughts, Daryl?
Well, I will be live today at 3 for Microsoft, Meta,
At
and
3
Tesla.
p.m.
Yep, or 3 p.m. my time, 4 p.m. Eastern.
Okay. Okay. I'm
There
glad you
you go.
clarified that because I'm like,
Yep.
whoa, wait, an
Yeah,
hour before the market closes?
I use some local time, but I'll have some information to share, mostly on Meta and Microsoft. Tesla, just because they're reporting, I won't have a lot of detail on them, but I will provide some good information on Meta and Microsoft. So you're welcome to join me if you're interested this afternoon at the market close.
I'll tell you what, if you want to send me an invite to your stream,
Okay.
I don't know what time I'm going to be able to join, but as soon as I can, I'll jump in. It'll probably be closer to 5 p.m. Eastern.
Okay.
If you're still streaming, I'll jump in. If you're not, totally understand.
Okay.
Yeah, yeah. Good luck. Awesome that you're doing that. Man, looking at the earnings for these three companies, it's going to have maximum eyeballs out there. So, good luck.
Yep. Thank
So we
you.
have a late request here from Jan looking at CVS. Let's take a peek at it. And we had plenty of bad news go around yesterday, and CVS does have a part. So CVS is a couple parts. What we know CVS most for is its pharmacy network, dominant, number one. And they also bought a insurance payer, Cigna, and they bought it a while ago. And that's what's being impacted with the government's decision not to increase the premiums on the Medicare Plus programs. And they also do services. So they're trying to do more like urgent care kind of services at their locations. Now, something about CVS that I appreciate is green on the screen. And it's a massive business. This is like the Walmart of pharmacy. This is the Amazon of pharmacy. And I get that a lot of things go online. I get that. But man, you go to the doctor, you got the flu. Are you going to go online and go, hey, Amazon, send me that prescription? Oh, it'll be here in a day, maybe a little quicker. No. You can tell your doctor, yeah, CVS near my house. You go pick it up. You take your medication. You're good to go. So a lot of that type of behavior is not going to change. I think the whole, I think healthcare, distance healthcare, or I should say online healthcare, I think it works for, if you're just going to talk to your doctor and stuff. But if you have to go in for a test, you can't do that, over Zoom. If you have to go in for an X-ray or something like that. So I really like their top line growth. I've been an investor in CVS. I bought them at the right time. I'm sitting on a gain, but yesterday was a step back, needless to say. These guys are a massive business. They don't make a big margin on their business, but they do have good cash flow. Okay. Now, it's not the cash flow they were making hand over fist back in 2020, but it's very good cash flow. And you're going to see that they're discounted. So gross margins are low. This is similar to, like the Amazon business. You're not making a lot, but boy, when you crank that volume through there, you really get a lot of net dollar free cash flow. I see your comment there, Bo. We're going to get to your comment 1 second. So we got this year, they're supposed to grow at 9%. Next year, it looks like there's going to be a pause on growth. It's not going to be as great, but it's going to be positive. Still good. It's going to grow their profitability. They're going to bring down their PE ratio. And then going forward, they're going to grow, flat. Profits are going to expand. I think it's a terrific business. And who's going to compete against CVS, right? They pay a dividend of 3.6%. And over the 1 year, it's up 31%, even including yesterday's trouble. Who would complain about 31% appreciation plus the 3.6% dividend? I wouldn't. I would feel a little greedy. And if I look at the valuation on CVS, it's discounted. So I'm going to hold my shares. What's my position on CVS? How big is my position on CVS? 1.4% of my portfolio is in CVS. And right now I'm a little shell shocked on healthcare. I must admit, I'm not ready to put any more money into healthcare all that fast, but maybe I should put some money into CVS. What do you think, Daryl? You going to talk me into or out of putting money into CVS?
Well, I know yesterday someone asked, is anybody buying UNH? Because I had sold half my position, but I did add to it yesterday because the intraday 1 hour charts were starting to look pretty enticing. So close to the end of the day, I did pick up a few shares of UNH. Looked like it was kind of bottoming out. And so far, that's been the right decision. Let me look. CVS, I think, is probably in the same. Yeah. So I bought UNH yesterday at 281, just as it was bottoming out at the end of the day, and they're up $5.31. I think some of these are probably going to be overblown. CVS might be one in that case. I can go and look at the shorter chart. Give me just a second to move over to that screen. So here's the chart I was talking about. So I'm looking at a 39-minute bars. If we go to like 15-minute, I could see yesterday pretty much all the way until about 1 o'clock in the afternoon. The 13-hour or 13 period bar. So multiply 13 times 15 minutes. That'll tell you how much time each bar covers. But it was continually going down. So I didn't want to think about buying anything until I saw that somewhat level out. And then as we got towards the end of the day, they had both leveled out and started moving higher. And now I can see that both the 5 period and the 13 period bar are moving up, and so is the price on UNH. So let's go to CVS now. Nope, that's CVX. I want CVS. Okay, we're looking at 15-minute bars here. We could see that it was declining, but they have both bottomed out. And if we go to, I always look at multiple time frames, but the 5 period bar has stopped moving down and moving back up. The 13 period bar has not stopped moving down, but I do see the price closing above the will trend line. That's the green line. So This looks like maybe it could have bottomed out. It's not quite the same picture that I saw in UNH, but I think it's probably overdone for CVS.
I think CVS is looking good. And comparing CVS to NVO, I would have to give the nod to CVS. I think they're both really good opportunities, but I would go with CVS. It's been one that's proven its rally, and I like what I'm seeing there. So Bo is going to ask for one more request. Thanks for the super chat, Bo. We're going to look at Duolingo. And Duolingo has been caught up in this story that, hey, AI is going to destroy their business, absolutely demolish it. And I'm not sure about that. I think people are going to learn languages, and I use AI quite a bit now. And I would say that I don't know what percentage of the time it does a good job. It does really good job with structured data and like things like it's like search being done much better. Okay, great. But if you're learning a language and it needs to be kind of a learning platform, I'm not sure that you're gonna be all that interested in going back and forth with Gemini or chat. And it's just not made that way. It's a general chat GPT, general purpose. I forgot the last thing. General purpose. Okay. It's not learning purpose. No, that's what Duolingo is. So they're growing their revenues. They're growing their profits, growing their, geez, the market's just nuts sometimes. Now, the market may be right, but the market could be wrong. If the market's wrong about how AI is going to destroy Duolingo, highly discounted stock. And if Duolingo just kind of goes about their business, it's like we're getting up to the Super Bowl. So, like defenses, right? Both the Seattle Seahawks and the New England Patriots. The defensive players, they don't get as much, airplay as like the quarterbacks and stuff. But they're usually the ones that really make a big difference. And if Duolingo, like a good defensive line, just continues to execute their business plan, grows top line, grows profits, this stock's going to work. If they can keep this line growing, we're going to be in okay shape. In fact, this might become a really good opportunity because it's so discounted. Its forward P ratio is coming down. This year, coming up, 2026, they're supposed to take a hit on profit. So I'd really like to see what they're going to announce there. Why are they taking a hit on profit? That's a good question, huh? And see how this is going to play out. I have a nice discount on Duolingo. I've been tempted to buy this stock. I'm glad I didn't because it kept selling off. I'm tempted to buy these small caps. The market cap on Duolingo 6.7 billion. This one here just it looks like the market believes that AI is going to put Duolingo out of business. And frankly, it may be right. But I'm not seeing the evidence both in if I rationalize it and say, well, are people going to be really engaged in learning a language with a chat GPT or a Gemini? I don't know. I don't think so. And I've heard that Duolingo is a fun platform to engage with. It's a fun platform to be on. So I'm a buyer of Duolingo. I keep, revisiting this stock and thinking to myself, at what point should I buy this stock? I've been, buying into small caps, trying to make that, trying to find a couple of good winners for 2026. This one most definitely might be in that grouping of small caps that I want to buy. What do you think of Duolingo?
So we looked at this one on Monday as well, and we put these auto support resistance line. I do see that they have broke down below this one here, which was at highs in 2023 a couple of times, maybe 4 times, and then they came down and tested it here, and they're trading below that at the moment. We have a 50-day, 200-day, 21-day, 5-day, all moving lower. So that tells me where the price is probably going. It's going lower. We have a distribution since the beginning of December, and we haven't seen the highs that we saw in May. And where we're trading right now is back where we were on the 9th of October. Money flow is negative. I think the price is still going down, and I don't know if we'll reach this $100 level, but I could definitely see 125 in play before this is all over. So if I were going to load up the truck, I would wait a couple of more weeks and see if we can get down to that 125 or so. And that's I see Mike has a question about cash
So his
secured puts.
yeah, what
That's about where I would put my uh, strike price is somewhere right around 125. If
mhm.
you want to own more of this and you want to buy 100 shares and get paid some premium for it, I think it's probably got pretty good support at this level. You do run the risk of it coming down and testing here and finding yourself a bit in the hole, but that's about where I would put a put strike. 120 would work too.
Yeah,
I don't know what
good
it's
idea.
paying. I don't know what the premium is for that right off the top of my head.
Nicely done, sir. Well, thanks for the question there, Bo. And Duolingo, I think is an
Yeah,
opportunity. We just got
that's
to
a
figure
good
out.
that's a good premium, Mike.
Excellent. All right, guys. Well, I've got to run. Thanks so much for making this live stream really, really interesting. Please tune in to Daryl's stream, the watch party on these earnings. Man, it's going to be huge. And I look forward to hearing the news. And I'll join your stream as soon as I can if you're still
Yeah,
going.
I'll send you the link. I don't expect I'll be going for an hour because
Hmm.
I don't have as much to say as both of us together.
Yeah,
So
yeah.
I'll go ahead and send you the link just in case.
Sounds good. Sounds good. Well, everybody, have a good day. Let's see where this market goes. Looks like we've got some green and red on the screen. Things are some stocks are moving higher, some are lower. Looks like the big announcers, Microsoft's investors are waiting for
Yep.
the news. Same thing on Meta, and Tesla's trading a little higher. But the big guys, at least Amazon, Google, Amazon, Broadcom, Apple, investors are holding their capital in their pockets at this point. We'll see what happens later today, and it'll be super interesting. Well, thanks so much, Daryl. Everybody, thanks for tuning in, and have a good day.
Thank you, everyone.